Welcome everybody to the 40 Finance channel. My name's Jeff Beers, and today I'm going to dig into the details on Amazon stock to give you my opinion. Should you buy Amazon stock in 2020? Let's jump in. Alright, on the surface, if you just go by media stories and news outlets, it seems like Amazon is obviously taking over the world with the way the headlines are. And there'd be a lot of people that would say, Amazon is, close to a no-fail business. Especially, with the rumors that Amazon is going to destroy traditional retail. It's already closed XYZ malls across the country. Amazon can't be stopped. They're going to take over FedEx and UPS and everything else. If you didn't look at the numbers and you just listened to the people talking, you might say to yourself, well, this is the greatest stock ever. I think what we see here today is that there are, at the bare minimum, there are at least better values out there than Amazon. But let's take a look at the numbers. So right now you got a PE ratio of 87 and a forward PE of 63, which is obviously a little high for, some tech stocks. You're usually in the 50s, and some of the more mature ones are coming down even more when you talk about Google and Facebook. The price right now at $2,008 actually is just a bump up from a week before, after they went through their Q4 earnings call. They had a lot of positives in there as far as beating analysts' earnings per share, some profitability, a lot of just good news around for Amazon, and a lot for that company to be proud of. But when I look at their one-year chart, I can see that there's a little bit of a pattern with Amazon, and it's not necessarily a bad pattern, but it's one that's based off quarterly earnings reports, and it's a very seesaw battle with Amazon as far as hitting their earnings numbers every single quarter. So as you see on this one-year chart here, we just came off of a quarter that they hit their numbers. Then you see others across the year where they didn't hit their numbers, and we'll get into that in a minute. So right now the tide is super high on Amazon because of the success they had during, the must-have Christmas quarter. And there is definitely a lot to be excited about, but we're, roughly 90 days away from the next earnings report. And if you're an investor and you're looking to jump into Amazon, I'm not sure that right now is the best time. You see on this chart, we have the last 4 quarters of earnings versus analyst expectations. And Q1, they hit of this past year. They missed on Q2, they missed on Q3, and they just hit Q4. And so when you talk about a stock that has a lot of swings to it, that's what you're going to see with Amazon, because there's so much pressure on their earnings. There's so much questions, just like Netflix. Did we grow XYZ in the retail space? Did we have more deliveries? Did we have more Prime customers? So on and so forth. Now, there is a significant portion of Amazon's success that should be tied back to their cloud computing platform, but that's under just as much pressure to get new clients and new customers. And in my personal opinion, with cloud computing, I think that's going to be a fantastic revenue generator for a lot of companies in the future. It already is, but the competition in the cloud is just going to get more and more, right? You have worthy competitors with Microsoft, with Google, Amazon's obviously in there, and the enterprise level cloud applications, or transitions, if you will, we're right in the thick of it right now, okay? But let's say 5 years from now, the majority of the big dollars that can really move the needle, companies, I'm just going to say Procter & Gamble, those big time companies you're going after, they're already going to have a cloud infrastructure. You may be able to get them to switch from, say, Microsoft to Amazon, but it's really going to be about who can settle in the mid online companies who can sell the best value. I think Amazon's in a good position there, but I also see a lot of small cloud companies popping up that'll do a better job of serving middle to small customers just through customer service alone. Looking at the annual earnings versus revenue for Amazon, you get a pretty good feel for how slim a margins they're running to get you your prime deliveries, for pennies on the dollar. This past year, they had $280 billion in revenue, which is obviously incredible. Of those $280 billion, just over 11.5 billion was actually profit, right? That's a pretty slim margin. Not too many people are going to complain when you get $11 billion profit, and I certainly won't be the first one to, but it takes a substantial amount of customers and orders to make the profit move for Amazon. And so that is one thing to be just a little bit leery of for the long term, and that is we're talking about a low margin business that's based entirely on volume. Right now, there's no competitor that can match Amazon's delivery systems and the sort of order today, get it tomorrow thing. But will that happen forever, right? Is that always going to be the case? Probably over the next 2 to 3 years, but if you don't think anyone's interested in rivaling Amazon for what they do for retail customers, you just don't understand business and competition. Okay, so looking at Amazon's valuation metrics over the past 5 years, right? And this is sort of like PE versus forward PE. In 2013, the trailing PE for Amazon was 1,042, which is obviously astronomically high. You would have had to basically be a speculator to some degree in 2013 and just said, you know what, I'm buying this stock, I can see the future. And if you did very well. The forward PE at that time was 103. And as we progressed each year, it's went down just a little bit, okay? Down to 951, then 171, then back up to 297. Last year, the trailing P was 84. This year is 81. So even though we look at Amazon today, if you're a value investor and you say, wow, that PE is high. That's way higher than any book I read on stock market investing. That's, this company, Amazon, has just an incredible level of debt. And you would say pass, right? But when you think about this growth stock and the way this world is really changing in the stock market in general, I would say that this is more of a momentum play, right? We're past the really hard time of will Amazon succeed or fail. Now you're starting to wonder at what clip will they continue their earnings. Analysts are going to continue to demand more and more. They've obviously integrated several systems to be able to produce more and more. But at this price, you're saying to yourself they will continue to bring cost of business down, cost of revenue down, and they will continue to grow customers. I think that's a pretty safe story, to be honest with you. For, again, another 2 or 3 years, I think it's a safe story. But there will be a point that all of America is going to use it as much as they're going to use it, right? I think for me, I feel good that Amazon will have a roller coaster ride to some degree over the next 5 years. I think most of it will be positive for 2 and 3 years, but then it's going to start getting harder and harder. That's my take, right? That's just my opinion. When they start bringing into this delivery system and you're talking about owning a number of different planes and last mile vehicles and all this, I think the story gets harder and harder, which may impact customer prices, which may lead customers to do different things. All right, on the tip rank side of things, we always like to see what the top performing analysts are doing, and it's you know, they're all in, right? We got 31 analysts on buy, no holds, no sells. 12-month target for Amazon, 24.28. That's a 20% upside from today, even after the Q1 earnings report. So the guys who are a lot smarter than me are saying huge buying opportunity here, at least plus 20% over the next 12 months. Now, I'm going to say that I agree that there is a substantial upside here, you know, plus 20%. If every year you got plus 20% on your money, you'd be rocking and rolling, right? But I'm gonna throw out a price target here for Amazon. Okay, on this chart right now, if you're gonna buy Amazon, right, you're at $2,008. This is a 1-year chart. The purple is the highs and lows. I put a green bar here at $1,900, okay? So at $1,900, in my opinion, if you can get in at $1,900 on the next dip, the next economic bad news, the next quarterly report for Amazon, if you can get in at $1,900, you basically are going to have a stock that's proven, you know, 3 times in the past 12 months that it can easily break the 1,900 mark. So you know that the demand can be there, and you're going to save, I guess, what is it, 5% off today's price, okay, of $2,000. You're going to take 5% off that. And I think that that would be the level that I'd be comfortable with Amazon. And prior to the run-up that they just had after Q1, you could have purchased Amazon below $1,850. Okay, so the $1,900 target is far from controversial or not going to happen. You could have just bought it for $1,850 a couple weeks ago. So if you're into Amazon, you want to own it as a single stock in your portfolio, I would wait, like we often do, for a dip to get the best possible price on it. And as far as I'm concerned, I'm going to hold my Amazon stocks within some of the technology ETFs that I personally get into, and I'll talk more about those this year. So bottom line, Amazon, good company, razor thin margins. Can the growth continue? And can they attract more consumers to get into their sort of addictive retail system? Let me know what you think in the comments. Give me a like and subscribe if you can. I really appreciate it. We'll see you on the next video.